subject of permitted non-audit work to an audit client has been the subject of debate all the way back from the big corporate frauds in America, the Enron and WorldCom at the beginning of this millennium. The PCAOB was formed and the Sarbanes-Oxley Act, came into place, which actually for the first time lowered the threshold on what was permitted non-audit services, and therefore came up with 14, 15 clearly excluded services that a statutory auditor could not perform. Those services were things like valuations, things like internal audit, things like accounting, which you cannot provide to an audit client, particularly a listed audit client, right? The Indian Companies Act pretty much took that same definition of what was there under the Sarbanes-Oxley Act and replicated that what were the services that a statutory auditor could not perform. Now remember, the Sarbanes-Oxley Act only applies to listed companies, right? That was under the PCAOB independence rules, where that only applied to listed companies. In India, it applied that to all companies. That's section 144. And in fact, actually it went beyond the requirements under the PCAOB independence rules and added one more criteria, which was management services, which nobody knows what that means, but probably wherever you end up playing a management role, I think was an additional item that was also added. So what is permitted? So that section 144 therefore defines what is not permitted to be provided to statutory audit clients by an audit firm that is the auditor. So what still can be provided is basically where you don't end up putting yourself in a management function, right? Where the decision maker is still the management of the company. Things like tax compliance, things like transfer pricing, compliance, things like working on parts of even transactions that a company does is something an auditor could provide. But anywhere where you end up becoming stepping into management shoes is what you can't do. That list is now so small of what a statutory auditor can do. Still, the culture was try and find a way to continue to provide those services amongst the audit fraternity. I will say quite openly, because that's what we were used to. Audit back in the day used to be a loss leader, where you accept an audit at a discounted price and try and always find other things that you could do for the audit client, right? Assist them with their systems, controls, transactions, tax, expansion across the world, whatever those things were, is where you look to make money. And I think that culture shift is what we wanted to recognize and drive. And that's why I encouraged our audit affiliate in India to become the first firm to adopt a voluntary ban on even those permitted non-audit services. So even whatever wasn't covered by section 144, I requested that firm to become the first firm, which they did. From 1st of July 2019, they said that any non-attest work they would not perform for listed audit clients. So basically, effectively that means things like IPO certification, things like tax audits, or when it was applicable, GST audits is what it would still perform, because that is either required to be performed only by the auditor under the statute, or it is an attest function. But pretty much all other advisory services that you could still perform, loan staff, etc. We voluntarily took a call that we would not perform. Why I asked the firm to take that voluntary call was basically to try and focus on audit quality. The need of the hour was to win back the trust of the marketplace, of the wider stakeholders in audit. And that could only happen if the focus was on pricing audit correctly and then focusing on delivering audit quality to the buyers of audit. Remember, the buyers of audit are not the management, is not the CFO. The buyers of audit are the wider stakeholders who place reliance on those financials. It is the management, it is the suppliers, it is the employees, it is the tax authorities, it is the bankers, it is of course the minority investors. And an auditor has to perform their role in order to deliver a report that says the accompanying financial statements are free of material misstatement, right? That basically, which would change the view of a user of the financial statement. That's what needs to be the focus of the auditor to deliver, not accept the audit at a deep discount and continue to look for other ways to help that company. And that's what we did. So I'm a strong supporter of that voluntary ban extending into an actual all-out ban on non-attest services by the audit firm. Now, what are some of the challenges? Having seen that implementation, some of the challenges are: does that ban limit itself to the audit company, the company that you audit? Does it go below to subsidiaries? Does it go to affiliates on the side, associate companies? Does it go to holding companies? What about levels above that? So, to what extent does that ban extend? But at least for the company that is audited and its direct subsidiaries, I am strongly in favor of a complete ban on non-audit services for listed companies. It's only focused our energies on, when we are accepting clients, is it the right fee? Because we are not therefore looking at additional services that we will provide to a client when you're accepting a client, right? And therefore pricing the audit right, otherwise never accepting it. Second, as I told you earlier, the focus of the teams in delivering audit quality. And audit quality delivery is not only through the audit team. You can't deliver an audit today without involving your cyber IT risk experts, without involving your tax experts, your indirect tax experts. So really focus on what we call smart collaboration, getting all of those experts to still get involved within the audit in order to deliver a high quality audit. So I think it's going to have a very positive impact in the market. It'll clarify the market who is a audit client, as we call a GT, a Route 2 client, or a Route 1 client for other services. The biggest norm, in my view, that needs to change within the audit market, if there's a norm that needs to change, is what is the proportion of fee that can come from one single client. Right? That norm in India is still 40%, where globally that norm is more like 10%, and that also with safeguards. More like 5% is the norm most firms would use internally. In India, you're still allowed to get as much as 40% of fee from one client. Now you can imagine, the independence, how an audit firm's independence would get impaired if 40% of your fees was coming from one client. So I think that has to change. That would be a huge driver where, hopefully it'll open up the market for many of those Indian firms where, there would be the need to have a mandatory joint audit. And I think that will really promote the creation of maybe 10, 15, 20 additional, reasonable, mid to large sized firms in India, which is the need of the hour versus just 5, 6 firms, 7 firms, which may be there today, who play in the, mid to large listed company space. And I think mandatory joint audit would deliver that. And that's why I've been a supporter of mandatory joint audit. Both it'll help increase the number of options that are available in the market, which is necessary for users, regulators, everybody today. I think the numbers, quite small. Second, what it'll also do is it'll reduce opinion shopping by companies. The moment there are 2 firms who are there as auditors, the chances that a company will say, okay, I don't like your answer on the position you're taking on an accounting thing which is judgmental, let's go to a third firm and ask that third firm, that would go down. Today, it does happen on contentious issues that companies do, want to go and seek the opinion of a second firm, third firm, fourth firm, to ask how would they do things. And I believe, the moment there is a joint audit, that would go down. And I can tell you only from my experience of, knowing the insurance sector. The insurance sector is one where there's been a mandatory joint audit in India, as you know now, for several years. If you look at that sector, at least my own experience has been just look at the data, look at corporate failures, look at frauds, and even if I look at internally, the number of contentious situations that come up, in all those things, I'd say it's one sector where it's the lowest across all those things. I'm not aware of too many frauds, I'm not aware of too many failures, and I'm not aware of too many contentious issues where there is a debate between the auditor and the auditee on a position where there is the view that let's go seek external opinions from other firms. So why is that the case? Because the insurance sector, in my view, has had mandatory joint audit. So I don't think there is anything to lose. I don't think at the same time it should be done across board, all listed companies or something. I think it needs to be restricted to perhaps Nifty 50, perhaps top 100, maybe 200 to begin with, and then over time, based on our learnings, based on seeing how it's worked, expand it further.